South Korea impeached yet another crazy president this year. Now the new guy, Lee Jae-myung, gets to take home the prize, an economy on life support and US tariffs ready to pull the plug. And what does he decide to do about it? Go all in on crypto, of course. That's right. The new South Korean president has hit the ground running with a crypto-powered plan to pull the economy back from the brink. So, what's up his sleeve? Will it work? And what will it mean for the markets? Stay tuned to find out. My name is Nick, and you're watching the Coin Bureau. South Korea. For years, it's been one of the most unique and, frankly, bonkers crypto markets on the planet. A place where crypto trading volumes can dwarf the national stock market, where nearly a third of the population owns crypto, and where XRP routinely does more trading volume than BTC and ETH. It's a market defined by passion, speed, and a trading culture that borders on a national sport. But in 2025, the game has changed. It's gotten a lot more serious. After the previous government offed itself in an unforced self-coup that would have been too harebrained for Netflix, a new administration has taken power. And they're not just crypto-friendly, they're going all in, rolling out one of the most ambitious pro-growth crypto agendas in the world. We're talking shelving Korea's CBDC program, legalizing spot ETFs, building a regulated stablecoin market from scratch, and, for the first time in 8 years, unlocking the gates for corporations to pour money into the crypto markets. It's a top-to-bottom architectural redesign of the nation's relationship with crypto, and, on paper, it's one of the most bullish policy agendas in the world right now. But there's a catch, a huge one. While the government is building out a regulatory supercar for the future of finance, the economy of the present is running out of gas and careening towards a wall. A wall made of near-zero growth, crippling household debt, a domestic recession, and the looming threat of a full-blown trade war with the United States. So, the big question is, can South Korea's crypto dream survive its economic nightmare? Let's break it down. To understand what's happening today, you have to understand the utter chaos of the last 8 months. It all began last December. 2 years into his term, former President Yoon Suk-yeol and First Lady Kim Kon-hee had between them accumulated an amazing portfolio of scandals. Serial stock market manipulation, electoral fraud, plagiarizing PhDs, accepting bribes from cults. You name it, the list is really, really long. For his efforts, the public rewarded Yoon with a sub-20% approval ratings. And as the evidence piled up and the walls closed in on Yoon late last year, it looked like a proper investigation was finally about to bite. That's when, one peaceful December evening, he declared martial law, sent the army into the National Assembly, and tried to start a war with North Korea. It was a surreal flop that failed within 2 hours, cementing Yoon's place in the tragic annals of the self-coup history. The public was outraged, the world was stunned, and all were left asking, sorry, he did what now? Yoon's own party descended into infighting, and by April 2025 he was impeached and removed from office. This turmoil triggered a snap election in June, and the victor was Lee Jae-myung of the Democratic Party. He's a former provincial governor with a reputation for being a disruptor. Lee's party already controlled a supermajority in the parliament, so when he won, it created a unified government. For the first time in years, the president and the legislature are on the same page, controlled by the same party. And this means that Lee has a clear runway to push through his agenda at speed. And a huge part of that agenda is crypto.
Oh, I didn't see you there. Well, now that I've got you, I may as well let you know about the Coin Bureau deals page. It's over there where you'll get $100,000 sign-up bonuses on the best exchanges in crypto, as well as 60% trading fee discounts on said exchanges. And you can also get discounts on hardware wallets. All of that in the Coin Bureau deals page down below in the description. Now you go back to the video, I'm going back to chillaxing.
Within days of winning, Lee's party introduced the Digital Asset Basic Act, or DABA, the legislative foundation for his crypto agenda. At its core is a focus on monetary sovereignty. In practice, this means building what Lee calls a national stadium, a self-sufficient domestic crypto ecosystem protected from the outside world. And this might raise a few eyebrows, as South Korea has long been one of the most insular and siloed crypto ecosystems in the world. It is already a walled garden that keeps foreigners and institutions out, and retail investors fenced in on a tightly controlled set of rails. Call it remodeling, then. Lee wants to give the walls a lick of paint and call it a stadium to promote homegrown crypto champions and, crucially, quote, prevent national wealth from leaking overseas. And this is where his stablecoin plan comes in. Right now, when Korean investors want stablecoins, they mostly must buy foreign dollar-denominated ones like USDT or USDC. To the government, that looks like capital leaking out of the country. They want to build their own pipes and keep that value at home in a kind of a digital protectionism for the 21st century. So, DARPA creates a framework for Korean companies to issue their own fully backed, fully regulated stablecoins, and the barriers to entry are surprisingly low. Lee's plan would allow firms with as little as 500 million won, which is about $370,000, in capital to issue stablecoins, a requirement low enough to ensure that everyone with a PowerPoint presentation and a dream can become the Korean Paolo Arduino. The central bank is horrified and has warned that a flood of privately issued stablecoins could, quote, seriously weaken the effects of monetary policy and pose a systemic risk. Naturally, they argue that any stablecoin issuance should be handled by heavily regulated banks. Lee's collision course with the Bank of Korea is so significant that it has even prompted the shelving of the government's own CBDC project. The central bank was knee-deep in Project Han River, the plot to introduce a digital Korean won, but in late June they suddenly hit the brakes, citing high costs and, quote, legislative uncertainty. But let's read between the lines. The government just created a clear, cheap, and commercially viable path for private firms to issue their own stablecoins. Why would those same banks want to spend millions on a clunky, state-run CBDC with no clear business model or profit incentive? They wouldn't. And they're now scrambling to form their own private stablecoin consortium, seeing a clear path to market leadership. By pausing the state-run CBDC project and fast-tracking a framework for private regulated won-backed stablecoins, the administration is aiming to achieve two goals: empower Korean tech firms to innovate and to reduce the economy's reliance on foreign dollar-denominated platforms. It's industrial policy disguised as financial regulation. The second main event in Lee's national stadium is a fast-tracked approval of spot crypto ETFs, which have long been banned in South Korea. The previous government viewed them as a threat to financial stability. But with estimates placing the number of crypto users in Korea between 10 and 18 million, a huge slice of the electorate, the crypto vote is a constituency too big to be ignored. And that's why both major parties in the recent election promised to legalize crypto ETFs in a rare moment of bipartisan consensus. So, the Financial Services Commission, or FSC, which previously blocked any discussion on the topic, has already submitted a roadmap to the President's office to get spot ETFs approved and launched by the end of 2025. After a year and a half of watching tens of billions of dollars pouring into US spot Bitcoin ETFs, they are finally feeling the FOMO. And this would give Korea's massive retail investor base a safe, regulated way to invest through their existing brokerage accounts. It would also stop Korean capital leaking out into ETFs in the US and Hong Kong, and most importantly for the crypto market, it would unlock a significant pool of capital by enabling Korean institutional investors and pension funds to enter the market. So, to recap, the political situation: a new, unified, and highly motivated government is ramming through legislation for domestic stablecoins and spot ETFs. On paper, it's an agenda that could have been written on Upbit. But who exactly is going to be buying? Since 2017, corporations and institutions in South Korea have been effectively locked out of the crypto market. A bizarre and sweeping ban prevented any corporate entity from opening an exchange account. And that's finally changing. But the government is being extremely careful. As such, think of it less like a floodgate opening and more like a rusty pipe starting to leak at the joints. The reopening is happening in phases. Phase 1. Earlier this year was just a sell-only period, which is exactly as bearish as it sounds. The police, universities, even the tax office were allowed to finally open special accounts to sell all of the crypto they'd seized in criminal cases or had donated to them over the years in a state-sanctioned market dump. Phase 2 started on June 1st. Nonprofits and charities can now open exchange accounts to sell crypto donations. In fact, we saw the first ever official sale. A charity called World Vision sold a whopping 0.55 ETH on Upbit. It was a historic milestone and the first crack in the wall, but market moving, it was not. Phase 3 is the one everyone is watching. Starting in the second half of this year, a pilot program will allow about 3,500 listed companies and qualified professional investors to open corporate accounts and actually trade crypto. Buying, selling, investing, it will finally be on the table for Korean corporations. However, there's still a big but. First, Korean TradFi institutions, the big banks, the brokerages, the asset managers, are still excluded. They can't trade for their own accounts yet, and this means the first wave of investors will be non-financial companies. Second, the true market impact depends entirely on the set of trading guidelines that Korea's FSC is set to release this autumn. And this document is the real catalyst. Sources in Seoul's financial district suggest these guidelines will be highly specific. They could cap crypto investments at a small percentage of a company's net assets. They might initially restrict trading to only Bitcoin and Ethereum, excluding the more speculative altcoins, and they will almost certainly mandate the use of a qualified third-party custody solution, creating a whole new sub-industry. So while the headline says 3,500 companies can now enter the market, the reality is that their participation will be heavily managed and restricted by these rules. The key date to watch, then, is the start of the pilot program. It's the day those guidelines are published. Now, when these institutions do start trading, where will they go? The Korean exchange market is basically a two-horse race. You have the king, Upbit, backed by tech giant Kakao, controlling over 60, sometimes 70% of the market. And then you have the comeback kid, and that's Bithumb. Bithumb was the original market leader years ago, but a series of devastating hacks and management scandals saw its market share collapse. They've spent a fortune on aggressive zero-fee trading promotions and have clawed their way back to about 25% of the market on a good day. They're also planning a massive IPO on the KOSDAQ later this year, with a top-tier firm, Samsung Securities, as the underwriter. A successful IPO would give them a huge war chest and, more importantly, a new layer of corporate legitimacy that institutions crave. And this renewed competition is good for everyone. It means these new institutional players will have a choice, and it will force both exchanges to up their game on security, compliance, and service. But the biggest question of all is, what will these new players choose to buy? And this brings us to the XRP anomaly. If you look at Korean exchanges like Upbit on any given day, there is a good chance you'll see XRP attracting more trading volume than Bitcoin and Ethereum combined. On some days, the XRP to 1 trading pair makes up almost 20% of the entire exchange's volume. And this is a uniquely Korean phenomenon, a legacy of early listing, strong marketing, and a passionate platoon of the XRP army stationed on the Korean peninsula. So, will the new corporate players follow the local retail herd and pile into XRP? Or will they stick to the global institutional playbook, which dictates a conservative BTC-dominant strategy? If it's the former, we could see another localized XRP-specific melt-up of epic proportions. If it's the latter, it could be the beginning of the end for these unique market dynamics, as a wave of institutional money begins to normalize the Korean market, bringing it more in line with global standards. The first trading data for this pilot will be one of the most important signals of the year. Okay, so we have a government rolling out the red carpet for crypto, unleashing institutional demand and trying to build a homegrown stablecoin industry. Bullish, right? That all sounds great, but with Korea's economy flatlining, a potential crypto boom seems like a tall order. This year, the Bank of Korea is forecasting GDP growth of just 0.8%. To put that into perspective, you only see numbers that low in Korea during a major global financial crisis, 1998, 2008, and 2020, all major international meltdowns. And now in 2025, the economy has been shell-shocked by a messy political crisis and extreme bipolarization. The construction industry, a major employer, is contracting sharply. Unemployment, especially among the youth, is stubbornly high. The price of living keeps climbing, while the minimum wage is still peanuts. Domestic spending is weak because consumers are terrified, and they have good reason to be. Korean households are sitting on the largest pile of debt relative to GDP in the global north. People are leveraged to the hilt on mortgages for apartments in Seoul that cost 30 to 40 times the average annual salary. When interest rates rise and the economy slows, that debt becomes an anchor that drowns consumer spending. In a recessionary environment, people have less money to speculate with, and corporate treasuries aren't exactly eager to start making multi-million-dollar allocations to a volatile asset like Bitcoin when they're worried about making payroll. But the domestic slowdown is only half the problem. The bigger, more immediate threat is a geopolitical hurricane coming from Washington. President Trump's 90-day grace period on his so-called reciprocal tariffs is set to expire on July 9th. And he has made it crystal clear he is not extending it. In recent statements, he has explicitly said that countries like South Korea, which he claims have, quote, taken advantage of America for decades, will be getting formal letters outlining new tariffs, potentially as high as 50%. He even singled out Korean automakers like Hyundai and Kia, saying they won't be getting any special deals. For South Korea, where exports make up 40% of the entire economy, this is an existential threat. A significant tariff on cars, semiconductors, and steel could instantly cripple Korea's most important industries and send the already weak economy into a deep, painful recession. So the government can create the most perfect, most regulated, most inviting crypto market in the world. They can build pristine multi-lane on-ramps for institutional capital. But if a trade war sparks a deep recession, there will be no capital to drive onto those on-ramps. Investor confidence will evaporate. Capital will flee to safety. The macroeconomic outlook is an inconvenient roadblock for a mooted crypto renaissance. So, why is the government pushing so hard on crypto when the economy is in a shambles? Well, it's probably because crypto is just really popular in Korea. Nearly a third of the entire country has traded crypto. Over half of adults under 60 have. The vast majority of crypto users own only a very small amount of crypto, giving rise to the moniker ants, as compared to whales. In a society with sky-high housing prices, a shaky national pension system, and a brutal job market for young people, crypto is a lottery ticket and one of the only remaining paths to wealth creation. President Lee, who has deferred a controversial and already long-delayed crypto tax, has called crypto as a small but certain happiness for much of the population. By championing crypto, President Lee's government is tapping into that powerful social current. It gives them a popular mandate for their policies, a tangible win to offer a public that is desperate for good news, even as the broader economy struggles and the political fallout of that self-coup continues to cast a long shadow over public life. So, how does this all play out for the rest of 2025 and beyond? It's a tale of two completely different timelines operating simultaneously. In the long run, say 2 to 5 years, the outlook for South Korea as a global crypto hub is incredibly bullish. They are building a world-class regulatory framework from the ground up. They have unified political will, a clear strategy, and one of the most crypto-literate populations on Earth. If they get this right, South Korea could easily become the dominant digital asset economy in Asia, leaving Hong Kong and Singapore trailing in the dust. But in the nearer term, don't expect any miracles. Korea's economy is cooked, and the threat of US tariffs hangs over everything like a guillotine. These macro headwinds could quite easily deter money from flowing into Korea's crypto ecosystem, regardless of whether or not it builds that shiny new national stadium. Either way, though, the show is going to be worth watching. Okay, if you enjoyed that video, you'll enjoy our latest one right over here. And if you're not subscribed to the channel yet, you can do that right over here. This is me, Nick, signing off. Thank you guys very much for watching, and I'll see you again soon.